Bitcoin rebound, or is it? Hi everyone, welcome back to Crypto Sense. I'm Neil, and in today's update we are cutting through the latest in the crypto world. What's happening right now and what it means for your strategy. So, here's the thing. There is talk that Bitcoin is finally turning around, that it may have bottomed out and could be heading back up. That's exactly what we are going to break down today. What are the signals that tell us Bitcoin has found its floor, or is it about to rebound? Let's find out. The Bitcoin price was moving sideways at $84,000 last week, but over the weekend, Monday and Tuesday, it finally recovered to the $87 range. Various signals are emerging, and I will introduce you to a few that seem to indicate Bitcoin has hit bottom. The first thing to look at is that Bitcoin has risen above the 200-day moving average, DMA for short. Again, if you're not familiar, the DMA is a tool used in technical analysis to determine the right time to buy or sell by comparing the current price with its average price over a set period. So, back to the main point. Right now, the 200 DMA is at $86,000 and Bitcoin has risen above it. Now, the next thing to check is if Bitcoin is really bottoming out and going up, is the 128 DMA, which is $95,000. So, if the Bitcoin price continues to rise and breaks through the 128 DMA to $95,000, it can be seen as entering an uptrend again. However, the important thing is that Bitcoin has returned between the 128 and 200 DMA. And this is our first confirmation of the bottom signal. Of course, I didn't buy or sell based on the 200 GMA, and I hope you don't either. Oh, just a quick disclaimer here. Instead of telling you what you should or shouldn't do, my goal is to help you understand the current trend. Now, let's take a look at the second signal, shall we? We have the Bitcoin Perpetual future funding rates now. And we can see that the Bitcoin Perpetual futures funding rate is negative. Right there, I highlighted the red part. Let us break it down. The Perpetual futures market is a unique Bitcoin futures product with no expiration dates, and the funding rate refers to the fee paid by either the long or short positions in these future contracts. Bitcoin futures typically have an expiration date, which creates a price gap between the future price and the current spot price. This gap usually remains within a range that does not deviate too much. The future price reflects expectations about Bitcoin's value at a specific point in time, often referred to as period profits. For example, if Bitcoin's spot price is $80,000 now, its future price might be $83,000 for a future date. This is how the futures price is formed. However, perpetual futures contracts are different. They do not have an expiration date. And that can become an issue, because the contract price doesn't naturally move towards the spot price as it gets closer to its ending. As a result, perpetual futures prices can end up being really different from the spot price. And to address this, perpetual futures employ a mechanism called the funding fee. See, in the Bitcoin futures market, as in any markets, traders are divided between buyers, long position, and sellers, short position. If a lot of traders expect Bitcoin's price to rise, more people will take long position and flock to that side, which creates an imbalance. Conversely, if many traders expect Bitcoin's price to fall, short position take over and people flock to that side too. To balance this, the bettors must pay a regular fee every 8 hours to the lesser side. That funding fee is usually a long position. Since many people expect the Bitcoin price to go up, they flock to this green long position, which I highlighted in blue. The funding fee is exchanged between these two groups every 8 hours. When long positions dominate, bullish sentiments, the funding fee becomes positive and long traders pay short traders. Conversely, when short position dominates, which indicates bearish sentiment, the funding fee turns negative and short traders pay long traders. This dynamic creates financial pressure on traders holding unprofitable positions for long periods. For instance, if long positions dominate and the funding fee is positive, long traders must continuously pay fees while waiting for Bitcoin's price to rise. Similarly, If short positions dominate and the funding fee is negative, short traders must pay fees while betting on a price decline. So, of course, if you pay the fee every 8 hours, people in this position will continue to lose money, while the Bitcoin price is wrong or just moving sideways. So, the balance has to be restored. Since you can't maintain a short position forever, and similarly when the long position is too large, it becomes burdensome to continue to pay the funding fee, right? As the balance of longs and shorts is matched, the Bitcoin price and futures price maintain a certain level of interest rates. Now it's a perpetual futures contract. Historically, when the futures funding fee turned negative, it was often the lowest point. If you look at the period between summer and fall 2024, the futures funding fee stayed negative like this. But after that, the price jumped significantly. In 2023, the same thing happened. The funding fee stayed negative from October, and then the price shot up at the beginning of 2024. So, back to today, the funding fee has turned negative again. Sentiment is pretty bad. Many people no longer want Bitcoin's price to rise. As a result, there are more short positions than long ones. This is usually when excessive pessimism sets in and short-term investors exit. Historically, this has often marked a market bottom. And since the Bitcoin Perpetual futures funding fee is currently negative, there is a chance the price could bounce back and start rising soon. And that's it for the second bottom signal. Now then, the third bottom signal is a peculiar one. Let's start analyzing the stock price of MicroStrategy, MSTR for short, now rebranded as Strategy. Doesn't this MSTR stock price fluctuate greatly? We all know this company, and its CEO is one of the largest Bitcoin holders, owning over 500,000 Bitcoins as of March 24th. As you can see, MSTR stock price is super volatile with huge swings of 20-30%. Yet, it has rarely fallen below its 200 DMA since 2020, when the company began actively purchasing Bitcoin. Since that date, the MSTR stock price has risen significantly, and you can see it in orange. This 200 DMA has served as a reliable support level for MSTR's stock price. If you look at it since then, from 2021, this purple line is the 200 DMA. Alright. And since 2021, the stock has only dipped below this average only once, during the bear market of 2022. Recently, MSTR's stock price touched the 200 DMA, you can see it in green, and is now rebounding. This could potentially signal a bottom for both MSTR and Bitcoin. The return over the past month is over 177%. And it has been rising over the past 5 days, despite overall weakness in the US stock markets. The stock's rebound from the 200 DMA suggests that Bitcoin's price may have also bottomed out. There are other information that I want to share with you regarding Strategy. They had a very successful fundraising through the issuance of new research preferred stocks, STRK and STRF, and they used the funds raised to purchase additional Bitcoin. Since March 24th, MSTR's Bitcoin holdings have recently surpassed 500,000, which contributes to the stock's bullish sentiments. These developments, combined with the timing of MSTR's stock price touching the 200 DMA, suggest that Bitcoin might be in a favorable position for upside. Alright then, third bottom signal done. Now, let us go for the fourth bottom signal. We will analyze CME futures open interest and Bitcoin spot ETF inflows. For context, CME stands for Chicago Mercantile Exchange, where real institutional investors, the big players, trade futures. So, last week, the CME outstanding contract for Bitcoin futures fell like this. Look at this dark purple line representing BTC open interest. This decline suggests that institutional investors, particularly those engaged in short-term trading or arbitrage, are showing less interest in Bitcoin futures. However, during the same period, Bitcoin spot ETFs have seen significant inflows. About $700 million flowed in over the past week, after 5 consecutive weeks of outflows. Last week finally saw a rebound, turning into a net inflow. This recent inflow shows that long-term, heavyweight investors are stepping into the market with the intention of holding Bitcoin for the long haul. What's interesting is the contract between CME futures and spot ETFs. It points to a shift in how institutional players are positioning. Short-term traders seem to be pulling back on futures while longer-term investors are loading up through ETFs. That shift in sentiment could be a sign that Bitcoin is finding a bottom. That was a long one today. Thank you for sticking with me. So, based on everything we've gone through, it looks like Bitcoin has likely hit a short-term bottom, backed by 5 solid signals. But just to be clear, this is short-term. In the long run, anything can happen. One thing we need to keep in mind is macro and geopolitical risk, like the whole situation with Trump's tariff policy. Right now, markets are bouncing a bit on news that the US might be more flexible with reciprocal tariffs on April 2nd. But again, things can change quickly. Tariffs on Mexico and Canada have been postponed until April 2nd, and those on Europe, Korea, and China might be delayed a little longer, but none of it is set in stone. So, while it's great to see signs of a bottom forming, it is still too early to get overly optimistic. We have seen this story before. Short-term pain, long-term gain. That's kind of been Bitcoin's playbook all along. So, let's stay sharp, stay patient, and keep an eye on the big picture. Thank you very much. I will see you in the next one.